If you make over $400,000 per year and you're ready to buy an Airbnb for the tax savings and the cash flow, then you probably still have questions about material participation, the short-term rental loophole, bonus depreciation, cost segregation studies, and how all this stuff works. Let's run through a quick example so you're clear on how all this works. So let's go through a typical example of someone who's in the high income earning bracket who makes $600,000 per year. And they're trying to go from here where they are doing nothing and they have a pretty significant tax bill. And they are trying to get into the category of someone who buys a short-term rental. They take bonus depreciation. They use that as an offset to reduce their total taxable income. And here's how it works. Big three items. Number one, bonus depreciation. So this is that thing when you actively manage a business like an Airbnb or a short-term rental that comes along with that asset and allows you to offset your total taxable income. The cost segregation study is that thing that allows you, once you close on a home, to come up with a dollar amount that is appropriate for you to offset or expense against your total that is appropriate for you to offset against your total taxable income. And then finally, material participation, and specifically the 100-hour requirements. What you need to do once you acquire the property, once you go live with it. So I'm going to break that down with a really simple example here. So we've got a home that Peter, one of our clients, closed on last year in 2024. So here are the numbers. He bought this home for $949,000 in March 2024. And then here's where items like the material participation came into play. So what Peter did is once he closed on this home, he and his spouse literally went to the property. They spent an extended weekend, and this is what most clients do. They took about 5 days. They flew in on a Wednesday or a Thursday night, I believe, and then came home back on Tuesday or Wednesday. And what they did during that time was actually pretty cool. They did some very basic improvement projects. So one of the first examples was they had a general contractor or a GC with them the whole time. So what is a general contractor and what do they do? Well, they're there to basically do anything and everything related to small, minor touch-ups, cosmetic improvements at the property. So for example, if you walk a property that you just bought, you might be in the kitchen and see, hey, some of these cabinet doors are swinging a weird way, or we're having trouble opening something, or there's a dishwasher that needs to be affixed properly to the inside of whatever unit it's in. Other simple things like floorboards, other simple things like cosmetic deficiencies, things that are like dents, dings, other things that you want them to improve on the property. What you'll do is you'll typically walk the property the first 1 or 2 hours that you're there the first morning. The general contractor will identify, hey, I can go to a Home Depot or another goods store and literally buy everything needed, paint match if they want to trim up or paint up something else on the interior or exterior. So Peter and his spouse did that. Plus, they also had what we would call a designer. So this is somebody that they specifically engaged with who was going to help them on interior design. So they made very small, very simple improvements to the style and the theme of the home. So one of the items that they did was a mural. So they did a very tasteful drawing or mural. It's very, very classy. It gives you a better, what's called a hero shot, this like cover photo that's associated with your listing, the Airbnb listing, and do professional photography once they were all done. So when you think about what are you doing to solve for the material participation, this thing that we talked about, and get 100 hours in, very, very simple, very, very basic. This is what most people do on their short-term rentals. They will literally try and front load as much of that as possible so that it's very, very clear that they materially participated in the business in a really simple way. They have a general contractor with them that they probably already screened or reached out to. They found on Thumbtack. They found them on another platform, TaskRabbit, Angie's List, or they worked with a team like us to help find these people prior to even closing on the home, prior to even visiting the home. And then a designer who is basically somebody like an interior designer or a furnishing designer, somebody who can come in and get the property to improve even better once they finish that design. And then finally, a photographer who didn't show up while they were at the property, but this is somebody who came through 3 or 4 days later once the general contractor had come back and finished 1 or 2 small things. And then the designer had finished with not only the mural, but some simple furnishing improvements. So once Peter and his spouse finished with that 5-day weekend, they got the property live on Airbnb a few weeks later. Fast forward to the end of the year, they ordered that thing called a cost segregation study. Now, a third-party company is typically going to be the party who literally visits the home. They show up with a drone, they show up with a camera on a tripod, and then they physically walk the property, and they take assessments of every item that is within the home, or things like flooring, walls, appliances, you name it. And they assess a total depreciation amount that can be applied on the purchase of this asset in the first calendar year so that you know what is the final amount of bonus depreciation that you are going to take and you are going to file on your tax returns. So this is a really simple example. Some frequently asked questions after this. Is this something that you need to consistently do and continue to do every year after the first year that you've acquired the home? That is not necessary. This is something that just needs to be done in the first calendar year. So let's say this year, for example, you buy a home in 2025. You do want to follow a very, very similar process to this, which is just getting clear on what is your taxable income now, if obviously tax is a part of your strategy for buying a short-term Airbnb, short-term rental Airbnb. You want to get clear on, well, if I buy a certain amount of property, what is the average range of bonus depreciation that I can likely take this calendar year? And then you want to figure out what is the purchase price, what is the area, find a good deal in that area, and then just recognize the way that bonus depreciation is calculated is a result of a cost segregation study, and then you need to qualify that with material participation along with actually getting the property live this year and then actually running it as a short-term rental, meaning the average duration of stays are under 7 days on average, which is going to be pretty easy because if you're running it as an Airbnb, almost all your stays will be 2 or 3 nights. There'll be the occasional 4, 5, 6, 7 night, but almost all your stays are going to be well under 9 days or 7 days in length. Anyway, the final item is bonus depreciation this calendar year. So the Trump administration has already mentioned this multiple times. It's not a matter of if, rather when. This is February, March, and probably in the months of April, May, June is when he actually moves for getting back what he referred to as 100% expensing or 100% bonus depreciation. So if you're on the fence on any of this stuff or if you're unclear on anything related to the short-term rental game and you want our team to help, just feel free to click the link around this video and we're more than happy to step you through everything related to how we help hundreds of clients every single year find cash flowing, tax-saving Airbnbs without doing all the legwork yourself. So click the link around this video and we look forward to helping you soon.